closely watching ARM Holdings this Tuesday. Second quarter sales rose to £118 million. That beat estimates. And this is how the microchip designer is trading right now. And as you can see, up by nearly 2%. Now, ARM Holdings has almost doubled over the past 12 months, making it one of the biggest gainers on the FTSE 100. That's nothing compared to its longer-term performance. The stock is up more than 500% since 2008. The reason? In a word, Apple. ARM's computer chips help power the iPhones and iPads that have driven Apple's incredible sales growth over the last 7 years. But ARM also supplies other handset makers, and its dominance is growing. In May, it said it expects to have 50% of the mobile market by 2015. Researchers at IHS say ARM could win almost a quarter of the tablet business within 4 years. Analysts, though, are not convinced. More than 30% of those surveyed by Bloomberg have a sell rating on the stock. Let's see what the company's CEO makes of that. Warren East joins us now in the studio. Warren, very good to see you. You do have ambitious targets. You do have interesting expectations from the market. Just how confident can you be that those sort of figures can be matched in the next year or two?
Well, we can be very confident. We're exposed to smartphones. We power 100% of the world's smartphones. Our market share in mobile has historically been very strong, but we're also now gaining share in across a huge range of different products.
And so your outlook for not just smartphones, but the tablet computer market as well, it's taking off, right?
Tablets are an interesting new form factor, and one of the drivers behind the comment to which you referred to in the introduction about gaining significant share of the mobile computing space by 2015. I mean, right now we power the most of the tablets that are out there, and that's an emerging form factor which is set to grow over the next few years.
Are we on the cusp of a technical revolution, really, that the mobile internet is becoming the way and will become the way that people will access the web?
We absolutely believe that this trend towards widespread internet connectivity is set to continue.
What about the touch screen technology? Are you developing chips that are going to be used much more extensively on that, new products?
Well, yes, if you take something like a tablet computer, there are several ARM microprocessors within the tablet. One of those could be an ARM powering the touch screen. Typically, it's an ARM in the main brain, the main processor socket, and also ARM is used for the internet connectivity, the Wi-Fi, the GPS, the cameras, or all of these other sorts of functions.
What is your outlook for the chip industry in the second half? Things are looking up?
Well, there's a lot of comment around at the moment. There is widespread uncertainty in the macroeconomic environment.
Yeah, I was just speaking to the boss of ST Microsystems, and he was saying, you know what, the second half is going to be really quite difficult, squeezed revenues.
Yes.
What are you thinking about the same sort of lines?
Well, absolutely. But we are encouraged because we see semiconductor companies like ST Micro managing their inventories and managing their businesses very tightly as they look at this period of uncertainty. And we set that against the fact that ARM is exposed to long-term structural growth markets. We're very buoyed by the very high levels of licensing. That's people doing designs for the future. And typically our business does take quite a long-term outlook.
Now, you're the best performer in the FTSE. Are you expecting to raise your dividend?
Well, we've announced this morning interim dividend up 20%. This is consistent with our policy of progressive dividend, and this is the interim, so yes.
Given your key part in the market, are you at all concerned that you could be the target of a takeover? The likes of Oracle, the likes of Intel are thinking, hang on, we'd like a bit of these Brit guys, not just a bit, the whole lot.
Well, there's been a lot of discussion about that over the last 18 months or so. However, our business model is to enable all these players with our technology. People can gain access to ARM technology at a fraction of the cost of actually buying the company. That said, we're a public company and we'll have to see what the future brings.
Is it your share price that shields you from that?
I think it's the business model which means that our technology, as I say, is available to all of these companies. We're an ingredient technology, a very vital ingredient technology in the products that many of these companies work with.
Let's just move on a little bit further. We've got the GDP figures out later this morning in about an hour and a half. George Osborne says growth should be rebalanced and driven by manufacturers. Are we too late for that bus? That bus has already gone. You're just left with companies like yours. You can't really take up that strain.
Well, we do concentrate on the design end of the value chain. That's absolutely true. We enable a lot of manufacturing, most of which takes place in Asia and in the US. But that said, we occupy a very, very valuable portion of the value chain, and that's why we trade as we do.
But do you think that we could possibly bring that California spirit of Silicon Valley to Britain, and what would it take? It would be a bold government that really starts investing in that.
Well, actually, a lot of the companies in the space are based in the UK and working as we are, global leaders who happen to be based in the UK, investing in jobs in the UK, growing our headcount here. But we regard the market as a global market, and we enable companies all over the world.
Okay, Warren East, we have to leave it there. Thank you very much indeed for joining us on Bloomberg today. Good to talk to you.